Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Polestar Automotive, ticker symbol PSNY. And here we can see this larger scale falling wedge that we've been in for a pretty long time, going back to October, the end of October 2022. And we recently did break out of it, but then following this news with Volvo kind of rug pulling Polestar, we did fall back into the wedge. But it does look like if we zoom in that we have broken out again. So I'm wondering if we start to see some moves to the upside and things like that. So I'm pretty excited about the stock price moving forward into next week. And before I get into that, I do want to point out that Polestar closed the week on February 16th at a price of $1.77, being up just about 0.5% on the day, and again about 0.5% in the after hours, being up over the course of the week. Let's see, almost 3%. It does look like we have been seeing some consolidation over the past couple weeks, which does raise a little bit of concern that this might be a bear flag. But considering that, going back to the daily time frame, that we have broken out of this wedge again, I'm feeling pretty good about it. So I'm not really too concerned about that bear flag possibility because we are above this key trend line. And also, I believe in last week's video, I did draw this dash trend line, this uptrending level of support. It does look like on February 13th, we did break below that with a close just below it, but that does look like it was a fake out. Really, if we do see a breakdown, that needs to result from two closes below or above a level. And so we did not see that on the 13th, but we have seen two closes above this top of the wedge here. So, that could suggest that we're going to start seeing some more bullish action, potentially going up to fill this gap right around $2.15 that was formed following the news from Volvo. So, I'm feeling pretty good about, what we're going to see in the weeks ahead. But, I do also want to caution, from last week's video, I do believe I went over this retracement and how there was this level down here at a price of $1.56.6. So it is quite possible we could be going back down there if we do break below this level, the all-time low at $1.59.6. So do keep that in mind. But really, before we get there, we need to be closing below $1.66, marked by this purple line. And that was the close here on February 5th. And so that does represent the lowest close that we've seen. We did see a low close on the 13th when we did have that red day going down almost 8% on the day. We did close at $1.67, so just above that key level, that purple line there. So I do think that's really good. That did, on many levels, appear to act as a fake out, being a very red day, closing below this trend line and dipping below this level of $1.66, but not closing below it. And so that is key. And since then, we have just seen green days being up, let's see, over 4%, almost 4.20% on Wednesday. And then we did get these other two candles outside of that wedge, the following days being up 1%, and then again, about 0.5% on Friday. And so looking at this, some levels that do stand out, I actually did a retracement, kind of a shorter one rather than going from the top here. I just did one from, let's see if I bring it back into picture, the top here following this gap down, just to give us some more levels, kind of a higher resolution idea of, where price action is if it's respecting support or being rejected from resistance. And so from that retracement, we can see that the 236 here at a price of $1.73.3 does look like over the past couple days that has been acting as support with price trading above there. Really, following Thursday when we did close above that level, we have had two more closes above that level as well. But then just above it, the 382 is at a price of $1.78.6. It does look like that is acting as resistance as we've gotten multiple wicks above that level, but then closes below. So hopefully we can break above that level, really start to get to right around $1.80. That would be nice. And I do believe that if I did a retracement from the top here down, that one of the levels would be right around $1.80. So it's something to keep in mind. But then the next level up is the 50% retracement, and that is at a price of $1.82.9, which is coincidentally the, let's see, close, almost the close on February 1st, which is at a price of $1.83. And so that does represent the highest close that we've seen during this consolidation. So if we could see a close, definitely two closes above $1.83, that could suggest that, we are going to start bouncing out of this consolidation and start to move higher. And then so levels to the upside that we could be looking for, really, just thinking about $2, that being a psychological level. There are other levels around there that do stand out. But I think that, really, if we just start to get closes above $2, I think then we could really, start to make our way towards 215, if not higher, like, this psychological level here up at $2.50. Corresponding with the tops over here, and let's see, having served as support during this double top formation. So, I do think that there is a lot of upside for Polestar, especially following this, bad news here. I do think it's a great company. I do think that they've got great vehicles, and I do think that we are going to start to see some moves up because we have broken out of this wedge yet again. And when we did that before, we did see a continuation higher, although that news brought us down. That news is behind us, so I think we can start to make the moves we were meant to make before we got rug pulled. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.